All right, so it looks like yeah, I woke up to news. Looks like news just hit what 30 minutes ago, and it hit in favor of CAD. So price pushed up. Um, of course, I'll talk about leverage. Some of you are still in. It's if you're still, or hopefully all, and we're going to talk about leverage so that you guys can know how I leverage my account. So when I trade, and right now I'm in two trades total, but I use 1% of my account when I take a trade. So right now I will tell you from with CAD JPY literally right now is taking up 2.8% of my account right now. That's what CAD JPY is doing right now. And so we'll talk about that 1% where it gives you a cushion to make a decision and say, do I stay in? Do I get out and not have to make a critical decision? Because sometimes that's what the news will do to you. So I stopped making decisions off of the news when it skyrockets up because I wanted to see it settle down first because the news will change a lot of things. Remember, trading is all about emotion. So looking at this, do I feel it looks like it's gonna go up? Absolutely. It looks like it may go up. But I'm going to let the news settle out first because you'll see just like it goes up, you'll see this happen right here. We'll start pushing all the way down. And one of the things I looked at when we did, now I see some of you talk about I am never touching JPY. I will tell you, I am realizing that the yen maybe moves a little bit differently. Yep, the yen does move a little bit differently. 2% of 20,000 is a lot of money. So. But this is, I don't know if you use 2% of your trading account or 1% of it, but yeah, it doesn't look so big and it gives you time. So I'm going to talk about what I look at. So the reason I put the daily in my peripheral, right, a part of the checklist, because I do use the daily. Because sometimes if I do have to turn this into a swing trade, a bigger trade, I'll do that. So I'll look at price exhaustion, right, where price always turned around at, stuff like this. Now there's several moves that can happen. You see, that's why I have this line here. Is price may come down, respect this area, and then this is, I'm looking for this. This is not, I don't want to get caught in this right here. But for the most part, if price continually does what it does, if it pushes back down, okay, then we're going to get a drop here. So right now, I don't know what the market is going to do, but I'm in the wait. I'm watching this area here, and then I'll determine. But I want you to know my mindset when I'm like with the way my account is working. It's not really affecting my account too much. Yes, it's a big number. Okay, but the percentage in my account is not a big deal. So we've been obviously on a good winning streak. So we've profited, and then you have those moments where this happens. The things we can't control when someone speaks. We can't control the news, unfortunately. So the only thing that you'll ever have control over, and you have to bear this. The only thing you will ever have control over is the way that you leverage your account. And so just know when you're going into a trade, any instant someone can get up on that mic and say something, or someone can tweet something, and it kind of changes the market for a little bit. So it may have you where you have to be in a trade for a day, 2 days, unfortunately. But that's just trading, okay? And that's going to be the difference between not leveraging and leveraging properly. Some folks, I seen someone was like, my account, because I started going through the messages this morning. Somebody was like, man, CJ took my account, and I was at 30 pips. It was in the 30 pip pullback. So don't let a trade take your account at 30 pips. Now, if it stomped you out, that's a good thing. I mean, as you said, at this point, I'm out of the trade. So if you already have a decision in place, that's cool. Have your decision in place and say, I'm out of the trade at this point, and that's it. Because that's your decision based off what you're willing to see on your account, based off how much negative you're willing to see on your account and what you can take. Some people can take more than others. Some people can cut a loss and not think about it. And that's going to come with experience. I've learned to have to just take a loss and not even thinking about it and say it's going to be made up in the market. So when that time comes, so just have in your head, if you're a brand new trader, I'm just give you some techniques as far as setting a stop loss. You may get stopped out more than others, depending on the type of trade. But this, yes, absolutely, Heidi, it's have a mental stop loss, or if you don't know how to get out of a trade, put a stop loss in place so that it will make the decision for you. Okay. Yeah, James, I think you're the one, you're the comment I seen. Actually, I seen your comment. And so I seen some folks hop in and say that you were over leveraged because it was at 30 pips when you said that. So, and I think that you didn't understand what they were telling you. So let's just talk about, because it's hard to talk about, and we're going to get some trades here. The market just had some news, so I wanted to settle out a little bit. But let's talk about, because this is training. This is the hardest part about trading here when we get into bad trades. It's easy. It's easy to trade when we're winning, when we're 100%. But the unfortunate part is I know what's going to happen when when we're on this big winning streak, people are going to over leverage. I've seen, some of you tagged me in some posts on Instagram but didn't realize that I look at that. Somebody had like 120% margin levels, way over leveraged. Luckily that day, all the trades went straight into profit. But if that trade that day didn't go into profit, that person would have blew their account. So this is the stuff I'm seeing. So I want to make sure let's address it. So let's talk about it in your account right now. I suggest no more than, like, if you have $100 in your account, 0.01. 0.01 for every $100 in your account. And anything above that, just know that you're taking a higher risk, okay? You start getting to gambling, meaning, hey, if news might hit, news might not hit, right? Someone may speak, someone may not speak. You have to always think that when you push the sell or buy button, someone's going to say something out their mouth that's going to change this market around temporarily or permanently, might change the entire trend of what I expected, okay? So you just want to have enough leverage in your account. So if these times come, like, for example, I'll tell you what my strategy is for what's going to happen. Once CAD JPY settle out, which I think it will, because I'm looking at it, it's constantly staying within this range. The news just hit. If it starts reversing that back down, I'm going to enter my second position, and I'm going to catch the money all the way back down once I get the assurance that it's doing that. So that's trading. That's what I found comfort in. That's how I found where I win in when these situations do happen. Okay. Otherwise, back in the days, just like you, I did the same thing. I used to blow accounts because I was leveraging and only had what I used to have. Where if I went 50 pips negative back in the days, half my account was gone. That was I was over leveraging. But we all do it because we don't know what the leverage is. So if you have $1,000 in your account, I would say the max lot size on typically is going to be a 0.10, right? And then if you want to get froggy about it, you go 0.25, right? I would do a 0.25 for $1,000, but that was still on the high leverage side. Okay, that's 2.5% of the account right there. Okay, so just take those things into mind when you're doing a trade, and I promise you, like, if you did 1%, I want you to calculate. If you did 1% of your account, how much breathing room you would have. You wouldn't even be looking. You'd be like, up. You'd be looking at the day chart, be like, well, it's most likely going to swing, right? Right. So I'm going to watch this area. Price is exhausted here. Most likely I'm going to catch price reversing back down. Okay. Or if the day chart lights up, it closed above this point, day chart lights up, and that day starts pushing up, then I have a decision to make. It's like, I got to be out of this trade because now this is happening. I don't want this to happen right here. Okay. So, but right now we have decisions. So that's it. Don't want to preach too much about leverage, but I will tell you this is the hardest part. It is the hardest part about trading. And it's one of the 12 reasons why Forex traders fail. So I'll always have these in my head. I'll try to pull it up at the end of this. There's 12 reasons. The main reason why people fail, right? And so it's a catch-22 in all of them. So obviously fear is one. So, whether you get out of trades, in a trade, just fear causes you to not make decisions or not make the right decisions sometimes. Stay in trades too long or not getting the trades, or vice versa. So overcoming fear is going to come with education. Okay. Hope in the market. Sometimes, like staying in trades too long and not knowing when to get out of your trade. And so you have no clue about what you're looking for as an out. So some of you might be looking right now and you have no idea, should you stay in a trade or should you get out of this trade, right? You don't have a decision point. You don't know what it is you're looking for. So that's lack of education or an exit plan, right? So say, this is my out point here, whether it be your out point be here or here. And if you're leveraged properly, so you just got to have in your head, this is my out point. So don't have too much hope in the market, have a plan. Okay. Another one is over leveraging. That's a huge one. Over leveraging, lack of capital in your account. What else they call it? High aversion. So you're trying to basically make a gang of money with a little bit of money. Okay. And so that some of you, you know, a lot of people get away with it for a little bit, but remember what you do becomes a habit. So eventually that habit catches you. And so if you've been used to over leveraging, you've been winning over leveraging. What happens is people get used to winning over leveraging, and so it becomes a way of life. Yes, James trading in the zone. Holy, that was the one. I'm gonna tell y'all a story for you bringing that one up. I'm gonna tell you why trading the zone became real for me. But trading is hard. Like mentally, trading is hard. Okay. So the 12 reasons, I'm going to post them in our group today, because once you have the 12 reasons, you can point out and say, okay, I'm doing this right now. Okay, I'm doing this right now. Okay, I'm doing this right now. And then you stay away from it. The hardest one is going to be over leveraging your account. So what happens when you create the habit, you have bad habits of over leveraging, because you won this trade. Boom, I made $1,000 bucks. Boom, I made $10,000 bucks. Sometimes I see the problems. I'm like, unless you got 10 grand in your account or 20 grand in your account, you know, people are you're making the big bonuses. Right? But then it's the one trade, that one that gets you, and just take it all back because it was a bad habit. Okay. So you maybe you may win with that habit for a little bit, but it's going to be that one that takes you out the game for good. And you say, you know what? I'm never trading again. Right? Because you did all that work to get to that money and then you blew it. And I'm saying that because I'm preaching to the old me. That was the old me. I'm talking to the old me. And so let me go to the story of trading the zone. Okay. Remember, this was so clear. I can tell you the broker I was with, you know, I had Traders Way and I was making money, right? I had built my account up to about $2,600, you know, and so I was doing good. Over leveraged my account, got into a bad trade, news hit. Okay. And so I started playing the victim game. The victim game was like, I can't stand Forex. This was my story I was telling myself in my head, okay? Because trust me, I'm talking to me, but I know I'm be talking to a gang of people on here. The story I told myself in my head was, the brokers are out to get me. They watching my account, little old me, right? They're watching that $2,600, right? They out to get me. They watching my account. They're going to take it all. Folks, listen, my wife is listening to this. My wife was listening to me during this time. And I'm sure she's in her head like, oh my God, here we go. And this is what makes Forex the devil for your spouse and for those that are around you who don't get it yet, because they don't understand your mentality because you have a bad mentality. And so you're like, it's the devil. They're out to get me. This is why it doesn't work. And now you're in this mentality zone where you're not going to win in anything. Hear me, folks, because this will affect your life. Right? What we do in iMarkets Live is special because we're traders, and then some of us are builders. So I want you to understand, at that time I was building. So there would be days I'm like, I'm not showing nobody because my mind is messed up and I'm not taking any ownership. That's the problem, the ownership part. So I went blaming, just like, let me tell you, I blame the trader who threw the trade. I blame the brokers. I blame the market makers. I blame every invisible person behind the charts. Oh, it's America. They're behind Forex. They're taking all of our money, whatever it was. And then someone referred the book Trading the Zone, because I was such in a slump. And I remember sitting in the middle of my couch. My wife comes to give me a hug because I just blew that account. And she goes, it's okay, babe. My coach. I say, that's my coach right there. You know, she's watching me experience, and I kind of scared her from trading. Look, literally, because of that, my wife didn't want to touch the charts. Okay, so my mindset was messed up, and she comes and she says, "It's okay, baby. You know, you're gonna get this thing. You're gonna get it. I promise you're gonna get it." And you know, at that moment, definitely needed for that. But then the audio I listened to, I remember I had to take a trip, and I put that audio in my, you know, on my phone, and I listened all the way. Listen to that book. And one of the first things I remember he said, Forex is not here to make you money. It's here to take your money. That's one of the things that one phrase is, and I'm like, okay. Then he goes further in to talk about, you gotta understand, when you are in this market, it's not here for you, right? You're playing with sharks, you're playing with big boys, and then he starts talking about the mindset, okay? Right? And then he talks about the ownership, the blame game, and all this good stuff. And so the first thing I'm going to tell you guys, you got to own this. whether you're taking a trade from me, Dr. K, or any other trader at iMarkets Live or some chat that you're in, you have to understand, first of all, why did you enter the trade, okay? And then you have to go into what are your defenses in this market? What are you going to do, right? So I'll tell you the only defense, it's your leverage, okay? That's going to be the only one that you have in this industry, folks, the only one that you can win in, period. Yep. So I'm reading what you said, on point, Timothy, for all the way. You're going to take losses. Unfortunately, I wish that we can win every single trade for real. Yes, that book is on YouTube, but we're not going to win every single trade, unfortunately, right? We are going to have those times. Now, can we win every single trade depending on the way that we trade? Possibly, right? If you're leveraging properly, then you maybe be able to go into different trades. So one, I'll tell you lessons I learned even recent weeks. So when I threw that trade out to you guys, AJ and NJ, lessons learned for me is that I've always leveraged my account this way, right? But there was so much pressure when you guys were everybody's like, are you in the trade? And I felt that so many people were pinning on me to stay in the trade. I was watching you guys because a lot of people my account was different. Okay, you got to understand. This is why we tell you, I don't know what your leverage is. I don't know what your comfort zone is. So you're going to have to know what you can stay in and what you can't stay in. But that book is everything. So find it on YouTube. If you can, go ahead and drop that YouTube link in here if you find it off of there so people can have that trading zone. I think that is going to change a lot of the way that you trade and the way that you think. At the end of the day, it's mindset. Okay. And I don't mean to, I used to hate, and here's, I know someone's listening saying, oh man, here we go. You want to tell me about mindset because I'm in this trade. That was me too. I'm just telling you because I'm preaching to the old me. Because I remember Dr. K having to go through this. It's weird being on this side of it now, but I remember her having to go through this and talk to people just like this about leverage. And I was one of the people, okay? So if I can give you anything, if you're going to become a successful trader, your mindset is going to have to change, and you have to realize you're not going to get rich very fast. You will get rich if you apply the mindset, but you're not going to get rich. It's not a get rich quick scheme, right? It's one of those things we do have to set our mindset on the right course and realize you can't get something for nothing. There has to be some ownership in what we do. So anytime that you take ownership in anything, this applies to life. I don't care if it's not your fault, right? It's ownership, because when you take ownership, it gets rid of the victim mentality. And when you get rid of the victim mentality, then you put yourself in the driver's seat to take control and make decisions. And you don't let any other adult make a decision for you, because we're now adults in our life. No one makes a decision for us. We make our own decision. All right, so someone dropped the link there. Let's go and go through this. Let's talk through CAD, and then let's see where we're at, okay? So obviously news hit. So let's talk about yesterday. Yesterday we went into this trade. Let me see. We went in this trade, right? Let's see if I can find where we went into the trade at. So obviously we went into the trade here in this area here. We went into about 6-7 pips of profit. I know some of you look back because you play that in your head like I should have closed that and typically, closed that trade out at 5 pips. And then obviously unfortunately we got that reverse up. And then news, what happened was we had went into profit, and then I think news hit right here. Boom. Okay, news hit, came back, respected the clout in this area, and then we just been on this big consolidation roller coaster right here, okay? And consolidated actually started looking like, and this is where I did want to really see this part of it. So this is the part I don't like, okay? And so obviously you can see that this is symmetrical just about, right? So, typically if I'm trading, the first thing I'm going to do is go here, go to my tops. And this is another thing that's very hard to do, is be in a trade on the opposite end and then go plot out and see what you would actually plot the trade at and not try to make it work for you. One thing I used to do is try to make the trade work for me. I'll be in a bad trade and I'll try to say, hey, so I'm looking here and okay, so obviously we got this pullback here. So I'm going to let the news settle out, and then of course there is going to be a decision point. Okay. And if I'm looking, if this goes beyond this point, it doesn't come and break this point, then I have a decision to make to say, okay, I'm not comfortable anymore. I'm going to go ahead and get out because now I'm in no man's land. Right. And so I'm going to show you no man's land. Right. So I can't really make a decision really off this. I do want it. Would it be nice for it to drop? Absolutely. What I know from my training. Okay. So this is obviously the critical area. I don't even want to get really close to this. I like I said, I don't make decisions during the news. So the only good thing I would say, because typically back in the days, this had already been closed out based off what it did today. Okay, because I was looking at this. But I don't make decisions. If I make a decision, I'm going to make a decision before the news. So I'll tell you, and this is up to you. Like sometimes, and if I make a decision to close out before the news, I'm going to tell you one of the things, I never go look back at the currency. If I close it out, I don't want to look. I don't want to see if I won or lost. I just leave it alone. I made a decision. That's my decision. I don't look back. Okay. So right now we are the trade is 50, a little bit, 52 pips. Okay, about 51, 52 pips pull back. Okay, a lot of pips pull back, but and then one point it was like it's 67, 70. Okay, but I don't make decisions during the news. That's the only reason I didn't close it out. And then of course we got this reverse happening right now. So I'm gonna see what's gonna happen. This is our new 4-hour candle, which I love. It's coming back down. The goal is for it not to respect this, but if it respects this, then here's what we got. You know, if it respects this on the 4-hour, the next one lights up is going to push up. And so that's what you can expect here. All right. Now on their day chart, it's still below the cloud, obviously, but here's what you need to see. This day lights up. What I don't want to see also, I don't want to see another bullish day. See a bullish day? That's going to be bad news as well, right? This is what I don't want to see. And this is what can happen. This is our option right here. Because this is, okay? This right here. So obviously price is pushing down right now, which I love. Look what's happening. The 4-hour came down, so it did respect this area, which I love. If price pushes it all the way back down past this Kingston area, then this is actually a good look, and then we expect for this possibly to happen here. Okay, so we get this push back down, and then boom, we get our drop. So those are the options with CAD JPY. For those that are in, just obviously you have a decision point, so you're still in it. And so let's look at these trades. Now, JPY, I am going to watch the way JPY moves. So some people made some statements like, yeah, those JPYs have been the ones we've taken losses from. Okay. JPY does move a little bit different. It's pegged to the US dollar. So the unfortunate part is when things are said on the US side, we get affected by US. So there's several things going to affect this trade right now, which it has Canadian news, US news, and Japanese news. So we're affected from 3 components when it comes to news. And then we'll talk about GBP CAD. I haven't called that one yet. I've been waiting for that one to actually drop. So we'll look at a couple of these trades here. So let's take a look. If you're in CAD JPY, my recommendation, as long as you're not over, if you only use 1%, then you'll probably be good to go into another trade. But please don't over leverage. Okay. Yeah, JPY pairs move shady. Yeah, JPY pairs. I'm gonna tell you. So when you read, it's not trading this. There's another book that I read. I gotta find the title. It was early in when I first started. I don't know if it was Trading for Dummies or what book was that. One thing I had learned was that this is how I learned that the Japanese pairs were pegged. They call it's pegged. There's a couple pairs that are pegged. It's pegged to the US dollar, and the government, I don't want to say manipulates the currency, but the government does participate in the movement of the currency to control its imports and exports. Okay. All right. So do know that with the Japanese pairs. So the government does participate. And then we are also in August. So know that we're in August. With August, I'm sure you guys probably can go look this up. It said that most of the big banks are on vacation, or your big traders are on vacation. So the market can be moved around a little bit faster than usual. Okay. So just have that in mind. So you can see this consolidation. Okay, so this move may happen. If this start consolidation up, this is going to be a flag that comes, and then we get another push up. Okay, so we'll pay attention to that here. But please make sure that you have just proper risk management, whether you want to stay in or not. Yes, I'm still in. This was a decision point right here. It pushed back down. So I'm going to see what happens if it consolidates or if we just get a drop. Okay. But like I said, it's once again exactly 2.7% of my account is taken up from this one trade right now. Okay. That's what I'll tell you about that one. All right, so let's see what we have here. So for those that are brand new, you probably wondering like, okay, what are we talking about? What are we looking at here? So let's look at off to the left. Let's talk about if you're brand new and you're just now using the web analyzer, the first thing you're going to do to bring up your own, to make sure your chart is set up, is you're going to go down here to strategy, click on where yours is going to say select template. You're going to click on template. Okay, you're going to find Dr. Kathy Kirkland's ECC-11 strategy. You're going to click on the on button, save settings, and then it's going to bring up the cloud for you. Okay. All right. Once you have that up, off to the left gives us any type of major news that's going to happen. So what is it? I think this one already happened. CAD local. So 6:38. That was CAD. So this is the local time, local Canadian time is what it's giving us. So you'll know that. So you can do that conversion rate. So if you're Central Standard Time, actually, no, you know what? That wasn't local time. This has to be, because I think this happened actually at 7:30. Let me check that. Because that will be at 8:30 now. You know what? Here's what we have. I have my time on Eastern right now. So that was based off Eastern time. So 2 hours. Let's see, let me go. All right, there we go. So 7:30 a.m. So it looks like that was, trying to see what this time is showing, 6:30. So I think this is based off, must be based off Central Time or so. But this really happened at 7:30. Okay. All right, we got USD news today. So saying 12 local. Let me see what that. And really that's going to happen at 1 p.m. So this is one hour off for me. So this is 1 hour off for me is what it's showing. So I think this is set up for, I don't know what time this is set up for, Eastern time. No. TS, I don't know what time it's set up for, but I'll tell you this is an hour off for me. So this is going to happen at 1 p.m. So USD news is happening today after the afternoon. So we'll watch our USD pairs. Okay, we don't know what's going to happen. All right, once the end news just can go any which way. No, it does. No, it'll never feel good when you take a loss. Okay, and here's my suggestion when you take a loss. It's just like, this is a mental game. And depending on how you feel, if you don't feel good when you're in the market, do not trade for that day. Take 24 hours off. So one of the things that I like to do, I gotta take 20. If I take a loss, I have to take a 24. I have to take a 24-hour break out of the market to detox, get my emotions right, kind of get that pump up. If you got a coach, if you got someone to talk to you, okay, get someone to talk to you. You know, when I took a loss, I called my wife. My wife just talked to me, and just, that's it. Get your mind right, you know, and it's not, know that it's not you, okay? It's just, this is just what it is. This is trading. This is like a sport, okay? If you never played sports before, it may be hard, okay? But you are going to take losses. That's just what it is. That's the game. So we have to minimize the way that we take losses and how we take losses, and our comfortability for taking those losses. Okay, so my suggestion, if you take a loss, if you're taking a loss, don't trade for 24 hours, just so that you, even if someone throws the trade, okay, it doesn't matter. Try to just get your mind in the right place so that you are making the right decisions. Okay, let's take a look. I know I did a lot of talking here. Let's take a look at EURCAD. Obviously, news just hit. Currency strength meter. Take a look at this. So CAD is kind of holding strong. It is coming back down again. So let's see. All right, so let's take a look at what we got. So the first thing we look at is we look at our trend. Okay, that's the first step, number one. So we use the high probability confirmation checklist. So 15, 1 hour, we want it all to be below the cloud. 4 hour day chart. Okay, not below the cloud here. So this is one we won't trade. Why? Because, and this is, the day chart gives you the overall trend. Why do I pin so much on the day chart or the higher time frame? Someone asked this question. What's the difference between seeing the trend on the higher time frame and the lower time frame? Well, the lower time frame is going to give you the trend inside that time frame. Remember, there's four 15-minute charts in a 1 hour chart. So it may be in the downtrend on the 4 hour, but an uptrend on the 15-minute. 15-minute may just be a correction for the 1 hour. So really, if you're looking at that, this will be the bigger trend. So as I look at this and you see news hitting it, pull it back up. So this can possibly reverse back up. This might have already happened. You see how it already came down and touched this line? So I wouldn't want to pop in this, for example, because I feel it already kind of came down. So could it continually drop? Yes. But we're gonna pay attention to it. So it already actually came back down here. So it might be on its way back up for the reversal. Okay. And this was news hit here. Is what happened. So the bigger time frames. So let's take a look at this as a whole. Because on the day chart, this may actually be a flag. From the big picture of looking at things, right? But we have to allow the market to do its thing before we can make that decision. We don't know if that's the case, right? This can be the trend. This could be the new trend up. We don't know. But let's go to the day chart here, right? This is why I don't trade in the cloud. So you do have a point where prices has literally reversed every single time. This is a major floor here, right? And then it's right somewhat in the cloud. So this may actually push back up. So obviously I wouldn't want to get in this trade for the sell, obviously, because it's going to push back up, possibly, and then make this break. So the bigger time frames do matter, gives you the overall trend. So right now, I would say this is an overall bullish trend right now. We had that push up, got a correction, and then you get a push long term. We're talking about this is huge. It's a long-term trade. So if this does push up, boom, we'll be actually trading EUR CAD in a bullish wave on all the charts. So you can expect it to be above the cloud on this one. It'll break the, we'll look for the break here. Okay, so personally I'm not gonna trade this one. Okay, I think it may reverse back up. And hence we see how you see this Tankerson here, and then you have the Kinson. Anytime it goes sideways, letting you know the market is consolidated right now. Okay, so you want to make sure that the red line crosses under the blue line clearly before you hop on the trade. Okay, sometimes it can be hard because it's the fear of missing out where we're actually missing this move, but we're saving ourselves from getting caught in pullbacks like this. Same thing, market's going sideways. We need for it to make an actual decision and curve down. Then that would put us into that trade. But we've already thrown it out because of the day chart, and then on the 15-minute as well too. Okay, same thing. Everything's moving sideways. Okay. All right. And so EuroCAD's out. Let's take a look at this other one here. AUD USD. All right, so we're going to go through 4 confirmations. You guys should already have the sheets here. So the first one, we look at the trend. We trade with the trend. When we do that, so when we do get caught in situations, we do get caught in pullbacks. One of the things I like is that when I'm below the cloud, I know I can, as long as it's below the cloud, for the most part, it's coming back down. You know, that even happened obviously for AJ. We took that loss, 2 weeks ago with AJ and NJ, and what ended up happening? Both of those jokers came all the way back down. And I had dropped out those trades, but they came all the way back down to where they were supposed to. And of course, those things, they pulled back on us like no tomorrow. You know, they went 80 pips pull back and then they dropped. Literally, it was whoever could stay in there. And kind of CJ is dropping right now too. It dropped. So I was going somewhere with that one. Oh yeah, the reason when I trade with the trend, so anytime you're above the cloud, all are above the cloud. Yeah, on the 15-minute it might go through, maybe in the 1 hour, but overall 4 hour, especially the 4 hours is strongest, right? So this is what I didn't like what happened with because CJ kind of looks exactly like AUD USD right now, actually looking at this. And I can tell you this looks like a flag. This is a correction. This is definitely a correction for me. Right? So we won't look for I'll tell you automatically looking at this. You know, this is not something I would buy, okay? This is automatic flag, right? So we can just see how long it consolidates. It's a flag correction for me. So could it continually push up? It has to be a stronger push up, break this point. Once it breaks this point here, then you'll get your true reversal all the way back up. If it doesn't break that point, then AUD USD is going to continue down. And obviously that's it on the day chart. So this is what the day chart. So day chart is what I look at overall. it gives you the overall trend. And then you could even sometimes look at the weekly. If you're not getting on what on the day chart, or if you keep on seeing it hitting a certain area, it'll be good for you to go look at the weekly sometimes too, to see where the weekly's at. Okay, so obviously see what the weekly, this is now these are big moves. This is 1 week, this is 2 weeks, right? So if you were to stay in this, you would have been selling for this entire time, what, over 200 something pips. That would be, this is what you call a swing trade. Okay, so you know that we're in a bullish market, so you have so much leverage that you like, you know what, I'm gonna just close it up. So for those that are swing traders, let's say we were looking at the weekly, okay, we know that it's been bearish. Okay, now it's also hit a low that it's never been at before either for AUD USD. But if someone stayed in this for 2 weeks, because I have people ask me all the time, can you swing trade using the cloud? Absolutely. Okay, it's below the cloud here. If you were to this, you would have seen that this is a correct. This looks like a definitely a correction in respect to the top of the cloud. And if you did want to swing trade, you can scalp and make way more than this, but 256 pips. Okay, just closing up your phone and not even taking a look at it. This is obviously a correction happening here, a corrective flag here. So, that's what the day chart, just kind of give you another perspective of what I'm looking at when I look at these charts. All right. And I see a lot of your questions. I'm going to answer your questions here. I want to just see if we can find, if I find some in the market. If not, we'll just talk about, really, because I know a lot of people are in trade, so we'll talk more about mindset, and I'll just break down all the cloud, what I see in the market, because I do see more than just using the cloud. What you're trading, it's market structure. We're trading with the trend. We're kind of using some principles. We're using some discipline. So if anything, I'll talk through the trade. So automatically looking at this, big thing about trading is you look for, patterns in the market as well too. Okay, so if you want to see this much easier, you see this right here. 1, 2. This would be a double top, right? So you see something like this where price, every time it hit here, reverse down, hit here again, reverse back down. Guess where price is? Right back there. So what the money line is giving you, or what we call the lagging span, okay? This calculation is based on the close and open price, not how high it went. See the how high it went. Oh, so you'll see OHLC, right? Your open, which is the body of the candle, right? Your high, which is the wick, how high the wick went. Your low, which is how low the wick went, and then your close, which is how low is where the body closed out at. Okay, so this would be, for example, this would be the open of this bullish candle. This will be the close when it closes up. Okay, so every time price closes here and it reverts back down. So that's another thing you got to be cautious of, is what happened is this. See, we didn't see this, so we can't base really price. Price did go down here. That was the lowest point it went to, but price closed here. Are you get what I'm saying? So this will hopefully this is going to be an aha moment for some of you. Okay, so really this is the important part. And this is when you see me go look left. I don't go look left at the wicks. I look left at the body. Where did price close at? Because this is the part that matters. Okay, so we can see price has been trapped. Really, price has been trapped here. So if we just go off the money line, that's why some people can trade off the line chart, because this is what really matters. So you trading off the line chart. If you just trade off the line chart, you wouldn't, when the candles went up here, you wouldn't be freaked out, because really the actual, because the wick is up here, but the actual price is here. Okay, so you can see price is trapped here. So we need price to make a decision. So price either is going to reverse down or price is going to reverse up. And so even applying that, so let's look UCAT here. So let me just go clearly through the checklist for those that are new on here. So we threw EuroCAD out. It's not going to be a trade we're going to use. All right, so the first thing we're gonna look at, okay, I'm gonna do this real fast, and once again, we have this again. I'll look at the whole trade again to see where it's been, where price has been. Okay. All right, so 15-minute, 1 hour, Let's do this real quick. Okay, got the cloud here. Now remember, every line on the cloud, every line is significant. Okay, just always remember that every line is significant. So on this 4 hour right now, price is currently at 665, and the first support is at 62. So at 3 pips between here, so you can see prices. So price came down, price actually respected the cloud. So this actually may reverse back up. You can see that market automatically going to the 4 hour. The market has been moving sideways. Okay. Price has been trapped. Now these are big, huge moves, mind you. Okay. So if you're trading stuff like this, you can scalp stuff like this, but you got to understand how to trade candles. That's going to be more education here. So price needs to break this point and respect it. Okay. Respect this point, and then we'll get a drop here. So anytime you see me go put these lines here. So what I'm looking at is this green line, or I look at the line chart. So I'm looking left automatically. Okay, automatically I put a line there because that's a support point. Then now I look past, once it passes this point, where am I looking to? I'm gonna look towards the green line. Where's the next point at? Or I can put my line chart out, either one, okay? Because it's the same thing. Look left, boom. Here's where price had a major issue. See price reversed every time here. This is our significant floor. Right there, okay? So on the 4 hours, so either price will do this, see? Either price will do this and stay in this area, okay? Or price is gonna finally break, retest, and then shift down and give us so 40 pips right there, okay? And all we're doing is we're going to key levels of where price has been or it's been going. That's all that technical analysis is we're looking in the past. What price action is. You'll hear people say, I know you'll hear terms like I trade price action, okay? Price action means we just go in the past and we look and see where price has been. That's all price action is, folks. So we go in the past, we look at price has been here, right? Price has been there, and then based off that, we make a determination based off a break and retest. So as soon as it breaks, boom, retest that area, and once it respects us as a resistance point, we go in for the sell, and we catch this down based off our analysis. That's all that is. Okay. All right, so so right now here's what we're looking at. Let's look at the day chart, see where we're at, and it's above the column, the day chart. Okay, so and then red line just crossed up over. So we're not going to trade this one either, right? Because it's really this is what this really is. It's an overall uptrend. It just started. It's an ugly sideways market move, but right now daily it's still been bullish up. Now it hit a critical level. So will it reverse down? It could possibly reverse down. This is the first key level here. All right, some people trade this and it's fine. I mean, just know if you are going to trade this way, you're going to have to set a stop loss for sure, okay? Because you don't know if the market's going to shift up. And then you'll definitely, in an uptrend, you don't know in this trade, you don't know when it's coming back. It may go here, it may go here, so forth, but it's definitely a trend up, okay? All right, so UCAT's out for the high probability. Now, mind you, the way that I'm teaching you, it's just because we're using the checklist. If you were using something else, you know, and you do kind of scalp against the trend, just know this is different. We're using high probability confirmation checklist. We trade with the trend. We look at all the charts. So this would all be automatically be thrown out, but let's just assume this was below the cloud on all charts. I just want to take you through the checklist. So, first step, we look at all the trends, M15 to the day chart, okay? Second thing, we go place our support and resistance line provided by the web analyzer, which shifts momentum in the market. So I just put a line out here. I click on it. I find this edit deal right here. All right, and I'm going to put the price that it's suggesting, which is the called at price, okay? So 32678. So let's go there, 678. Now it said if the traders call off the M15, that it can give you 10 pips, okay? So let's see. Now, like I said, I use the high probability confirmation checklist, so I don't just hop in based off that. I want to So let's win about 5 pips and then it pull. So it may come back down, it may not. Right now it's consolidating. Okay, and remember this is where our line, this is where our cloud is at. So this is actually a support line here based off our cloud, and it's respecting it. So if anything, it has to come down, reject off of this before we go in for any trade here to catch these pips in, which you can. Okay, just know it's above the cloud. All right, so we put our line here. Let me get rid of this. Let me go ahead and get rid of this so there's no confusion. So this is where the web analyzer suggested, right? So that's number 2. Number 3, we wait to enter the trade on the pullback. Okay, so this thing is pulling back up to our line. What we're looking for, we want this to be a solid support and resistance. Now, I'm starting to think that I might even have to do, well, at least when it comes to JPY, is ensure that we get some major retests, because what happens, I want to ensure that price does not shift back above this point. So 1, 2, I typically say 3 retests. So 1, 2, and then once we get our 3rd retest, we look for price to start moving down in our direction of travel. So if we want to sell this, we want to see a bearish candle start moving. It passes, let's say this has been a point that's been reversing. We look for, we got that break, retest, and then we get our movement down, right? So 2 retests, we get our movement down. We execute the trade, right? So number 4 is price moving in direction. Number 5, before we execute the trade, we need this to make sense, okay? Now, sometimes, like I said, what happened with us with CJ, the news hit, it changed this all up. So right now, this is UCAD, so USD CAD. So USD CAD right now, this would check. So we'll be able to execute this trade for 10 pips. Okay. Now, mind you, there is a line that's here, so it's going to keep on bouncing off a point here. And that's what you're seeing. So now this one didn't meet our trade because of several points. 4 hour, was the 4 hour that was on? Or yeah, the 4 hours here. So let me bring that line back now. See where price turned around here? This you'll be hopping in too early. So I wouldn't get into this. I wouldn't get into this until it breaks this support area and it becomes resistance. And then of course you have your day chart right here. And then what that does, which is perfect, it breaks the Kenderson too. So if you were trading this, okay, and it didn't matter if this was up for you, what you'll be looking for once it breaks this Kenderson, which is also our 4 hour cloud, it needs to retest this point, and then you'll get a shift down to this point here for about 30 pips. And a stop loss would have to be in effect. Now, USD, yes, I wouldn't trade based off USD, and then you have your news. So trading this trend will be a bad deal. There's another USD news in 12 minutes. What you got? Let me see. Oh, we do have, we'll see this right now. A lot of things are affecting the market, so we'll take a look at that. Okay. And then we have this is the big one. So we'll see what the market may move and do some stuff here. And then obviously this is going to be a big one for those that are in, that if you are in any USD, any trades, just know that may happen. Now, what I've seen with pairs is when news is coming up, I've noticed the market will start moving the opposite way. So one thing I realized, CAD was on its way down before it shot up again. So just pay attention to that as well too. Just whether you demos, if some of you need to go back to demo and just check it out. Pay attention to how the news moves with your trades and look back and start studying the way the news, because sometimes the news reacts the same way. All right. So I will check some currency pairs. So we're not gonna do USD. UCAT, it's above the cloud for the high probability confirmation checklist, but could you trade it? Yes, you wait for the break and retest here. So it just popped down. You want this to come back up, retest this area, and then you'll get for that drop. No, because I know it looks good, but I'll tell you exactly what it will do. You know, you'll get in this trade, and it'll come down, and it'll pull you all the way back up, and then you're stuck in the trade, and then you're in the cloud too. So you want to make this will limit us from getting stuck in trades. We look at AUD, USD already. And there's news coming up, so we're going to be cautious in the market with USD anyway. That's right. AUD look just like CJ. And you can see they all of these AU, CJ, they all look the same. This is the same exact thing. So the market, so what we're looking at, all these pairs, they're all going to do the same thing. We're going to see if they're going to respect these areas or they're going to finally just reverse back up. Okay, same thing above the cloud here. All right, so let's take a look at it. I see everybody's questions. So let's take a look at. I know we talked about GCAT yesterday because we're looking for that. We were looking for a. Oh yeah, actually we're looking for a drop for that one. Let me see. All right, we were looking for this actually. We talked about this yesterday. Okay, so it shifted up yesterday. So this is a flag right here. So we're still waiting for this one. But like I said, this push once it happens. So this could be the possible. Let's see where we're at.
Talking about possible new tax tariffs. And what people are saying is, why do you want to do tariffs if you're saying a recession is not coming?
Okay. So I just unmute that. So my wife would just tell me something. I didn't pay attention to that. She was saying that I'm going to look into that. I don't know how true that is, but what I've been hearing, she said that Trump's been tweeting about 30 minutes before the market. Yes, that would move the market actually. Okay, I'm gonna pay attention. Okay, I didn't know that, so I'm gonna pay attention. So yeah, that will. I mean, obviously, you guys know that those things are gonna affect the market. But like I said, we can't control those things, but we can pay attention to them and not trade during those moments. So, and this may be one of the seasons. So there is a lot happening. There is a trade war. There is a recession happening. You know, even though we're not claiming it, there is a recession happening in the U.S. Right? Our economy is not doing too well. So of course, those things are going to affect the market. So, okay. So I'm gonna do some more research on that so I can have a little bit more training for tomorrow. I want to make sure I give you guys some facts and see what's happening in the market for sure. All right. So what we're looking at here, GBP CAD on the 4-hour. So this is a flag. This is what we call a corrective flag right here, right? You guys can see it. Got to what the previous high was, and you can see the price keeps on pounding, gets this point to close. Right? The thing that matters is not the wicks, it's where price closed at. So you can see price keeps on closing here, and then it reverses back down. Okay, so this is all a flag coming up here, corrective. And so what we're looking for, you look for a break here, but really what we're looking for trading with the cloud is the break here. And then this is 160 pips down to this point here. Okay, now if it breaks this point, if it breaks above this price, Then you just look left and we look up to this point here. But right now, I will tell you this is a corrective flag. So now we go to all the charts. We go to the day chart. You see it. You see it clearly on the daily chart, right? So once that breaks, so I think later today, once we get the new day candle lights up, if we get that bearish candle, we can expect to get our drop. So hence you see this. So we need price to close down here, and then we get our next day candle that drops. We want to ride this joker all the way down, okay? Which I think is going to happen. I think we can get that. So this is going to be a nice push here, which you see here. All right, but remember, we're not going to be proactive in the market. We react to what the market is going to give us. Okay, we're not going to assume that that's going to happen. We could do the opposite. So that's where GCAT is at. Did you hop in GCAT early, or are you just asking because we talked about GCAT? All right, what was the other one? US 30. Oh, US 30. Now, mind you, Dr. K, this is her field. I will tell you, she is the queen of obviously US 30 and all the indexes here. Oh, you've been in since Monday. Are you in a buy or sell? Great. I mean, the good thing, I'll tell you this. I mean, you're in a sell. It's below the cloud long term. This would have been your critical point here because this is the previous high. Okay, and it respected it. Okay, so that's good. All right, it respected this point, and sometimes price will even wick. But this obviously you will definitely be out of the trade here. But so you're swing trading it. So maybe at some point you might take a second position once you get the break here. I don't know where you entered at, but maybe you're going to catch your money all the way back down. Okay, small lot size, don't over leverage. Just catch something. Sometimes it may be. Here's what I'm gonna tell you. There's been times where I was like, man, if I got to do a 0.01 lot size, I'm gonna catch some money on the way down. It may not be much, but I'm gonna catch some money on the way down. I didn't stay in that trade for vain. Okay. So your entry was 0.2, 0.1667. Okay, let me plot that out. I think you're like right there, I believe. 60679. Okay, I mean, well, I think you're only 7 pips away, right? Now, what's happening is it is hitting. You see how it's in this flag. So here's what can happen. So you're currently 7 pips. I don't know what your lot size is. So you might be like, because you don't want to let go. Actually, I'm sorry. What'd you see? It's 679. So right now, oh no, price is at 9.8. So it's 30 pips away. Okay, so you're 30 pips away. It may go back up. Now, this is your critical area. So it's just in the flag. This is corrective. So it might keep on. We don't know how long it's going to go. All right, it may go up. You do see your red line is crossing under. You see your line is crossing under. Okay. Yeah. Okay. So this may reverse back up. It's a flag. So, but the great thing, you see this red line is crossing down. But if you look in the past, this thing it's not really respected. Because it's in the flag, gets red's crossing over, so it goes up here. So this might shift up, might come down, or you might get your break. We don't know when it's coming, but it is going to come. What I'm telling you is it is going to come. The great thing about when trades consolidate, the longer the consolidation zone, the bigger the move is going to be. Obviously, we see this huge move here, 160, this 160 push. I want to make sure I don't miss this part here. This is going to be a nice drop when it does happen. But this drop can happen here, but it might go give us another wave, and it might happen up here. So we don't know, but it will come. Okay, and there goes GCAT with the sell on the 5-minute. Okay, so but the great thing will tell you is on the day chart. Hey, this looks good. So what I do see is I'm expecting this push may actually happen. Okay. I already have an alert set for this one, I believe. So we're just waiting. Now what you can do, let's say you see this and you understand it. Here's where let's talk about stop losses. Let's say you want to catch this, enter a small position, stop loss up here, stop loss can go here, or stop loss can go above that previous high. Small position. So if we're talking about risk to reward, now let's talk about the swing trade of this. You do a small position, at the high, catch all this all the way back down. So, let's say a 0.10 lot size. What you're talking about, $1 per pip. It's $161. So risk to reward will be better. Okay. So if you want to do risk to reward, you could $161 versus a 30 pip stop loss. Yep, I would say, Son, it sounds like you're leveraged properly, so you'll be good there. Overall, it's in a downtrend. So GCAT overall is a downtrend. And let me look at the weekly. And then usually the weekly tells us, that was a correction actually. So here we go. So we're looking at the weekly for what the weekly tells us. This is what our weekly is giving us. Okay, so impulse, correction, then we get a continuation. So yeah, this might be 2 weeks, but this is telling us that we should probably get that drop here. Okay. Let's go to the past, see where we're at. So price is in an all-time low, and that's for a lot of things. So price in all these markets, that's was different. It's in an all-time low since we're talking about we had to go way back to 2014 and 15 to get these lows. And then obviously this is the lowest the market has been. So we're at the lowest point of where the market has ever been. This is where the economy's at. So major demand zone. So there we go here. 57. And this is why obviously we can't predict the market. We can only react to, and this is what we just react to. Okay, we wait for it to give us what we want. That's why the break and retest is powerful to make sure we're entering the trades properly. All right, so GCAT, we're gonna be looking to sell it. It's just not ready yet. That's all. Now, if you did take a position, just know that you might be in a pullback for a little bit. So, me personally, I won't take a position until it breaks this point. Or if it shifts up more and then it finally breaks the cloud and retests it, then I'll hop in. So that's what I see for GCAT. The lowest point on the weekly. Now that's a swing. And it's not sure if the market's gonna go that low, right? This is, because I will say this is like, we're in like demand territory, like price reversed up, okay? But look, 1.56, so let's say 1.57, so 300 pips. But just know this is new territory right now. This is new territory since 2000. We're talking about like 2000. We're talking about 2013. So 2013, folks, this is where we're in. Price hasn't been here since 2013, so 6 years ago. So best believe the market is doing some special stuff. All right, let me take a look at, let's do a quick training, and then I'll answer some questions. I want to make sure you get some value about the cloud. So let's talk about from the beginning to end of how I look at charts. So I want to give you some value here. So, so GCAT, yeah, like I said, overall. So when I'm looking at the charts, let me clear all this out. So I think something that for those that in the academy, I want you to, if you haven't already got to Forex Advanced, of course, I hope you finish your basics, but I want you to start having fun with this and understand what you're seeing. When you go to Forex Advanced and market geometry, they're going to talk about Elliott's wave, and they're going to talk about corrections or trading the triangle, or you'll hear Stevenson Lindor say trading the flag, right? Looking for the breakout, right? So when you see me draw the lines, like because you're going to automatically see them every time. Flags happen on every chart. Okay, corrections happen on every chart. This is just a huge correction right here, but it's a correction based on the day chart. So when you see me draw lines like this, you're not used to seeing it yet, but you'll start understanding flag formation. Get on the Sundays with Stevenson Lindor, and you'll see him drawing the flag. Now, on every chart, they're obviously bigger. The bigger the chart, the bigger the move. Okay, so this is not going to be an instant move right here. This is going to be over several hours and then maybe even over a couple of days. So looking at this, it's a 4 hour. So this alone was 1, 2, 3, 4, 5, 6. This is 1 day right here. Okay, this is 1 day. Okay, so this may stop. This is 1 24-hour period. And then it may take another day before this happens, or this may not happen. It may push back up. That's a whole nother day here, possibly. Okay. And then you may get, so this may not happen for a week or even 2 weeks, but it's a flag. It's going to happen. So remember, we can't make the market move. The market's going to move when it wants to move. But we know that the move is going to come at some point, and all we're waiting for are those points. So let me find a better, where did I see it? I think, which one did I look at? That was an automatic. I knew it was an automatic flag. GBP USD. Let's take a look at that one. Same thing applies there. I mean, trying to find one that's much more, but this is it. Let's talk about this one. Okay, you got your impulse move, corrective move. You see pricing stay there, so we can put like a little area there. So you'll always get an impulse, correction, continuation, and then obviously another correction. So this is the part you have to wait. This is the waiting game. And you can see prices. This is a GBP USD right there. Reversal area. Okay, this is a hold zone reversal area. So price came down, corrected back up to it, retest, 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 retest. Price does not want to stay above there, and this is the day chart. So what we're looking for this one, once again, for GU, price will come here. So when I'm also looking at flag corrections while I'm also trading, so you can scalp and look at long term for this. So long term, once GU rejects off of this and finally starts moving down, we're talking about 100 pips here. Okay, that's a correction. Okay, so this is what I mean by flags. So flags, you don't know, you have to wait for the breakout. Okay, it's gonna happen. So if you find, sometimes if you're scalping, unfortunately, let's say if we try to get 10 pips or whatever, somewhere in here, we get caught in this correction here. All right, that's the only thing about scalping. You get caught in the correction. This is why you do have to leverage properly. We know it's a correction, right? And we know this is a zone. Price clearly does not want to go above this area. Clearly, right? We tested several times. It's a resistance point, right? So we are looking for this break to catch the 100 pips on the downside. It's an overall downtrend. So we can look here. We can draw the line doesn't have to perfectly match up, right? We talk about your high, your low, your high, lower low, lower high, so forth, and go all the way down, right? This is overall trending down, corrective up, hit a major reversal zone. We're just waiting for the reversal to happen. We catch 100 pips on the downside here, okay? So that's what I'm also looking at when I'm trading. So overall, this is going to be a significant chart that you get to look at when you're looking at, I think you should always look at the day chart to see what prices, where the critical reversal areas are, okay? Which I give you I make it simple for those who are brand new, and I'll just call this a major reversal area, or your 4-hour chart, will be a reversal area, which that's what you see price banging against, okay? So all of it are reversal areas. We have reversal areas below it, and this is where the price trap comes in at. So the cloud is automatically trapping our price for us. So you don't have to draw the lines that you see me drawing, okay? Yeah, yesterday's call was recorded. I promise to you today, folks. If I don't get it out after I get off this call, My promises don't mean nothing. I'm gonna off this call. I'm gonna upload all these past videos that I was supposed to. So this won't be uploaded, and I'll upload our next one. All right. So this is the flag correction. Okay. So this is what I'm also looking at on top of the strategy. So that's to give you a little insight. Some of you are going to get it, some of you are not. If you didn't get anything I said, I want you to go on your Forex Advance. I want you to look at those videos. I want you to take notes, and I want you to learn what a flag is. Learn what a pullback is, a real pullback. I just think a pullback, we talk about it in the sense of a candle, but it's more than that. Pullback / correction. Okay. Understand what a corrective move is and a reversal here. There's a difference between a correction and a reversal. Okay. Just because it's red on your, just because it's red on your phone or your computer doesn't make it a reversal in the market. It's correcting, right? It's consolidating. It's a sideways moving market. So the market hasn't made a decision of where it wants to go. See, this is where market was moving sideways. Market made a decision. This was a decision, right? You got several consecutive this is the bearish market right here. Then price went consolidated, and then what, made a big move down. Boom. Okay. Price going consolidated again. Guess what it's going to do? It's going to make another big move down. Okay. And then guess what? It might make another correction again. Now prices, the market's still sideways here, but we know that price is consolidating. Boom. It may consolidate again or eventually reverse back up. Okay. Now the great thing, now you're wondering like, okay, so when we look at the charts, so hopefully I can see if I can teach this in a way. So now, so what is the science or what is the technique behind looking at it with the charts? Well, instead of me having to go break down every chart, I just say if it's below the cloud on the M15, right? Okay, it's below the cloud on the H1. Now I'm just saying that. So if it was below the cloud here, below the cloud on the 4-hour, okay, and then below the cloud on the day chart, all that's giving me, first of all, all my resistance points are above my price. So it has to go through four layers before I can say I'm out of this trade. Okay, day chart, obviously I look at it, make sure I'm still in the downtrend. But here's when I know I'm going to go long term. And so we get in our break right now here. When I know I'm going to go long term, right? Obviously we get our pullback on the day chart. I hate getting the pullback on the day chart. Really, what I'm looking for, I really want to see. I don't want to see no more than pullback on the 1 hour. 1 hour is a comfortable pullback. Typically, it's like 10 pips, maybe 20 pips, max 30 pips. Anything beyond that, now we're getting on the 4 hours. So you see, we have some stuff happening here. And I don't just hop in that. Sometimes that's a fake out. You get in, it pulls back on you. But we got our break, and then you're gonna get that retest. Is the 4 hour? No, we're waiting for this one. We're waiting for the 4 hour, but it's coming. Okay. So flag, this is a corrective flag. So I'm also looking at this. So if I see this setup, let's say I see this setup on the 15, and then we go all through the 1 hour, 4 hour, and the day charts below the cloud, you have a perfect setup. You're going into that sell. Same thing applies for a buy, right? 15 through the day chart, you get a corrective flag on the 15. It's already on your pullback. You get 2 to 3 red tests on the 15. We have a perfect setup scenario that we're going to sell. We're going to sell that currency, and most likely that one will give us a nice drop. So obviously the market has been mixed up. So let me just break the cloud down real quick. I always say that every line is significant, right? Okay. This is just stuff you can research, but you have this red line, which we call the lead 2, lead 1. It just makes up the cloud. Just know it's a reversal area. So I know most of you look at it as long as it's below the cloud. Do you realize price came down, pulled back, and did what? It respected the day chart cloud, right? So this was a resistance here, and then what did it do? It pushed back down. Okay. Consolidated, pushed down again, corrected back up. Respected the cloud. So these are reversal areas, but I also want you to see the Kumo twist. So you get your push, price came up, okay? It twisted up a little bit, corrected, but then it started coming back down, okay? So then we have our confirmation that we're still in our trend down. Boom, price is still going down, price below the cloud, price corrected back up. You got a small Kumo twist again, and then it came back down. So all these are all calculations. So kind of just give you some comfort, so you can see there is no Kumo twist coming here. So this is a correction for sure. Okay, we have a correction happening here. Now, if you start seeing this on the day chart, now you may see it on the 4 hour chart happen. Okay, so you see that a little bit, But because this can happen right here where you get a twist, just like this. You see that? Twist up, then you got the twist again. No clear twist here, so we might get a push down. But now if you start seeing this curve up, then we definitely need to be getting scared because then our market is going to come here. This is what we're looking for. But we have no Kumar twist here. I'm going to look for the market to come down here. So it looks like our strength is changing a little bit in the market. Let's see what we got. Here we go. Market's starting to let's go take a look at GCAT real quick. I'll look at EUR/USD. Okay. All right, so it looks like we're going to get a nice break for GCAT and GU. And so when I'm looking, so let's talk about, matter of fact, let's talk about this. So if you can visually see this, so here's what I do to see when I'm going to be able to get into a trade. I'll take the arrow and I'll take it from here on my day chart and I'll go to here. So now when I go look at all my charts, I can see where I'm going to enter the trade in the future. See there? So we know on the day chart, this is where it goes below my Kinnison here. Okay. Then so it'll be below the cloud on the 4 hour. It'll definitely be below, it's already below the cloud on the 1 hour. Okay. And then it's going to be below the cloud on the 15. So now mind you, on the 15, it's going to push, the 15 is going to constantly go up and down, right? You're going to get this up and down, right? The pullbacks in between. So now when you're seeing, so overall, so what are you really looking at? You're going to look at the day chart for the overall trend. You're going to see when it's going to be below the cloud on all the charts. And then you're going to make your push to get in, right? Below the cloud here. So we're looking at around 1604. So about 30 more pips, right? So 1.60420 around that time. Okay. It'll be below the Kinnison on the day chart. And then it'll be below the cloud on all charts here. And then we ride that thing for over 100 pips. Okay, so hopefully you can understand that part there. So if you want to start looking at the day chart first, look at the overall trend. Draw your area to wherever the bottom is going to go to, right? If you start understanding corrections, this is a correction. Now, for those who understand trading candles, you also know that this is an engulfing candle. It's an engulfing candle right now. Now, unfortunately, this is a day chart, okay? So the price is not going to close here until 4 o'clock. Then it'll be engulfing. Then you'll be actually looking to get in for the next candle for true trading. So you get your engulfing. Next bearish candle that comes in, you'll catch it all the way back down. That's trading using candles here. Okay. So we got our nice correction all the way up, consecutive. Boom, we get our engulfing. This is a reversal pattern. Got our engulfing. Boom, we get in for the trade. We take it all the way down. All right. This is why I say there's way more education to this. Don't stop with just learning the strategy. Learn the education that you have in IML. Everything that I'm teaching you, I've learned from Christopher Terry, from some of the other traders, and plugging in and watching, going through Forex Advanced Market Geometry and all that over and over again. And I still go back because there's things that you won't remember or things that you see that you didn't understand at that point. But then when you go back to the video, you're like, oh my goodness, that was good. You can find these videos on my YouTube. Just type in Randy Webb and you can type in plus ECC-11. You'll be able to find it and just subscribe and I post the videos there. So I will tell you, I mean, obviously I learned trading within my first 6 months, my first 3 months. I didn't get good until after probably a year. A year when I started, like this, to me, I just look at a chart and I see it, right, automatically. Some of you are looking at this, you're like, I don't even know what you see. So I will tell you after a year, I was comfortable, but I was always looking. I've done a lot of different, like I started off trying to trade with naked charts, which you'll hear people call it price action, and you're just looking in the past. It's the same thing we use in the cloud. If I teach you this lagging span, if you didn't have anything else on here, let's say we got rid of the cloud, and you just had the money line here. Okay, so just looking at our highs and our lows, right, based off price action. So if we look at the day chart, look at previous highs and lows. So this will be our high here. So we just look at that money line, right? Boom. And then if it calls it, if the web analyzer calls it, and then we look at our highs, this is our highs and our lows for the day on the day chart, right? And then boom, so what did price bounced off here? Where's price going? Price coming down here, okay? If price passes this point, where's price going? Price is going here, okay? This is it. This is all that we're really doing. So sometimes you may have to get rid of some of the noise if it's confusing you, but really what we're looking at, so I'm teaching you the stuff that I would have liked to know that I would hear people say, but it never was explained. So you hear price action. What is price action? It's looking in the past. Where has price been? Boom, that's my high. So guess what? When price, and you would have seen that off the cloud because you've seen then if you trade with the candles, we call these, this we call a tweezer top, a double top. So you have those things. You get this is a doji candle, right? So you get boom, impulse, doji candle. We're looking for the reversal, okay? And that happened. Then we get this is corrective, okay? We get price exhaustion happening here. What's price exhaustion? Price went up, got this long wick candle. It didn't stay there. Price really close here, okay? Price went up again, price really close here. So we knew that price was gonna have an issue. Then finally price reversed here, okay? So that's our high right now, right? We're looking for a break and retest from the flag. And then we get to the bottom of price. I'm suspect here. I'm not gonna try to continue beyond this point. I don't know if price might reverse here. So since the past gives me this, I'm gonna comfortably say that targets wise, if I'm looking long-term trades, my first target would be here. Okay, so a little bit before it is where I would put it at, right there. Okay, if I was long-term trades, so this is big term. These are not small trades here. So we're looking at, this is 100 pips right here, and then you get if it passed this point, then you get the rest of the 60 pips here, okay? Or actually, this is a much bigger move than that. But, so do you guys see that? So this is your high, this is your high, this is your low, okay? Or actually, this is your low. Previous low right here, actually. There we go. And this will be it. So that's how you look at the lagging span, your money line. So it's not guaranteed. So when you hear it, it's not guaranteed that it's going there, but because the market is bearish, yes, the market is moving down to this point. All right, let's see where we're at. And so we are going to get that break and retest. So price is going to move for a little bit, and it's going to come back up. Okay, price. Remember, price is going to get. It's like running a marathon. It gets tired. So price can eventually go down and then move up, retest the area, and then drop back down again. So that's all. If you can learn that, right? So we got the web analyzer now to make sense to you. Break and retest. You're not going to get so excited and fear that you're missing out because you know that it's always going to come back. So boom, break, retest. We get our drop all the way back down. This is my previous low. No matter how long I have to stay in the trade, right? I'm going to get my money. So for those, you see CAD JPY is making this move down right now for those that are in that one. Yeah, CAD JPY is making a nice move down now. Nice reversal pattern. So I'm gonna take a look at that. So the market is steadying it out right now and again. Let's see what our strengths say here. All right. So hopefully in the midst, you see that leverage is our friend. So we're gonna get GCAT. So GCAT looks good. Let me bring this back. So you guys, hopefully that explained the money line for you. Let's bring some other things back now. Now I'm gonna just explain these one at a time. Here's what I'll do. Let's talk about our conversion line. Okay. So our signal line. Okay, signal line tells us when we can make the move. Right. So if we use the signal line, it tells us when we can make our move. All right, it's called the conversion line / the Tankinson. So when price goes below it, it's good because I always say that price cups it. So this is what I want to see. If I'm going to enter a trade, I want price to close below my Tankinson because my Tankinson is going to be the thing that signals for me to go into a sell or signals me to go into a buy if I didn't do. Now, if you are a price action person, now price action does mean that you can get in. You're not even looking at none of these indicators, okay? Price action means that you accept that, okay, that was my high, and most likely once it breaks that high, I'm going to initiate my trade here at the high, and I'm going to set my stop loss here. Okay, so you set a 40 pip stop loss, okay? Then you catch the price all the way back down here. So, of course, you're going to get stomped out. It's sometimes, but then when the price does it again, you're going to enter that trade and take it all the way back down. That's for those who say, I want to become swing traders. That's what swing trading is. Okay. No, we're not in GCAT. We're not ready for GCAT yet. We're going to wait. We need to break and retest. You see how I was respecting the tungsten right now? So we need price to close here. So really this trade wouldn't be legitimate for us until obviously this day close if we're looking at the day chart, or we're going to base it off our lower time frames. So what we can do is we can put, that's our tungsten on our day chart. There goes our line. So what we're looking for here now, if you want to get in early for this 4 hour or 1 hour, let's say our 1 hour finally breaks, okay, close it out, comes back up and tests. Same thing for the 15, but I would say you want way more. I would want a good amount of tests of this zone to make sure it's going to drop, and then you can enter GCAT. But we're not in yet. So just going through the breakdown of what the cloud is. So this is our tungsten right here. So anytime the red line crosses below the blue line, it signals for us to go into a sell. Anytime that the red line crosses above, it's an indication to go into a buy. Okay. That's the red line. That's what it's used for. Now we go look at our blue line. Let's go and bring that into view now. Our blue line is used as a stop loss line. So legitimately here, could we go into this trade and set a stop loss here? No, this would not be a sell for us right now, because right now the Kendrickson is below the red line on the day chart. Okay. So now we put the Kendrickson in effect. This is our real reversal area too. So what's in between? There's 20 pips in between these 2 points. So price has to go through both of these points. So I need this red line to cross under. Once this happens, boom, we're catching all this all the way down. Okay. But we can see that we're about to get our cross. It happens on the smaller time frames first. So now let's talk about stop loss. So you get the red line cross below the blue line. Above the cloud, it's a weak indication. Okay. Below the cloud, it's a strong indication. Okay. Because it's a sell. Now, if we get a cross up above the cloud, it's a strong indication of a buy above the cloud. Okay. So once we get this crossover, guess what? It's an indication for us to go in for that buy here. And then what you do is you set your stop loss above the Kendrickson. If you want, you can boom, set it above the Kendrickson, ride it all the way down. If you're doing long term, stop loss, once this cross happens, stop loss goes above here. We catch the pips all the way down here. So obviously risk to reward will be way better. So we can look and see, let's say we did that. Let's say this cross happened. Our blue line steadies out here. We set our stop loss at this point here. So we'll talk about risk to reward. So I take this, we're going to short it, right? And they give you your risk to reward ratio. Okay. So it's like you're half. So 50%. So you're risking 50 to get 100. Okay. So that's how this works. All right. So that's our red blue line. So let's go ahead and bring the rest into view now. Let me remove all this stuff off this chart. All right, so here goes the lead. Here goes our lead 1, lead 2, right? You see it names them. So lead 1, lead 2. Remember we talked about that? So of course the fill-in is just a fill-in. So here's when you look at the indicators, it's all in one indicator. So all of it is a mathematical equation, by the way, as well too. There's this many periods divided by this and this. So just know it's a mathematical equation to get all these lines. So here goes our reverse. So now we look at, see, I had all these lines here, but really it gives it to us already. So here's a support point, right? Price may go there, reverse up. Price is trapped here. So price went up, came back down here. Okay. Red line gave us the indication. Red line crossing the blue line gave us the indication to actually go in for the trade. Price is in here. What we're looking for is the break at this point. Go in. That's going to probably come down a little bit more. We look at our previous low here on the 4 hour. So we'll be able to take that trade down there first. Okay. On the smaller time frame. Okay, so just know that these lines are, this is your lead 1, lead 2. When this line twists, it hasn't twisted yet. When this line twists here, it's going to give you the cue that it's going into that downtrend. Okay, so by that time, you should get a break at this point. You'll get that Kumo twist here, which gives another indication. Okay, so it's going to push down and then at some point push back to respect that twist that happened down to the downtrend. And then now we are in our downtrend. Okay. All right, so now then the rest is just, this is just fill in the cloud. The fill part is just the background. So hopefully that gave you some understanding of the breakdown of the cloud. Now we look at this indicator as a whole. It's an indicator. And then we also know how to trade the flag. Now we have a lot of things in our tool bag that we now look at this in a whole different perspective. Okay, so this is why you don't need any other indicators. So a lot of people ask me about the RSI. I really don't look at the RSI too much anymore, okay, because really market structure is everything. This is market structure. We're looking at the highs, we're looking at the lows. This is everything that you need in the cloud. And then now we put the web analyzer on top. Oh man, they didn't we got this all down. The web analyzer just, when the web analyzer is going off, it's saying look at here, look at here, look at here. There's momentum happening right now. Okay, so let's go and click on this one. So USD news happening. So all right, so take a look real quick. So now that you guys got the perspective, look at the 15. Okay, so you automatically see that, boom, okay? 1 hour, okay, good. Below the cloud, 4 hour. Day chart, overall downtrend. So what are we looking at here? So what's stopping us from going this trade right now? Anybody know? Some brave soul can put in the group what's preventing us from going in this trade right now. That's Sheila Brown. Hey, you on the news? That's one. That's a good one. Yes. The price is in the cloud. Yes, price is in the cloud. That's right. Yeah, the Tangson is definitely a key too. We want our Tangson to cross down. We want that Tangson to split off. Okay. Right now it's showing consolidated. The biggest thing, yes, James, I was looking for that one. I was looking for the support. That's the answer I was looking for. Support. Okay. So on the 15-minute chart, we actually have our lead 2 that's there. So we're looking for a break, retest here. Okay. Then first target. That's only 5 pips. So it's gonna break. It's gonna come back up, retest this area, and then we can look for what, 10 pips initially for that one. Now the news is gonna hit, so we're not gonna trade this. But here's a prime example. Once again, let's go. We went to the high again. So previous high went to. See how price came up here. I know it looks crazy, but this is a correction because it wasn't engulfing. So price corrected. It's just a strong correction. Sometimes the correction will do that, boom, and then you get your push back down. And then what we're expecting is a push back down to this point here. But this is obviously, the market is sideways. Overall, the market is sideways, okay? So just realize that it's not moving as much. So not something you really want to mess with too much. And this is what you got to recognize too when the market is actually sideways. So that means your correction is the same as your impulse move. But all the markets, I'll tell you, overall, it's in the downtrend. So what I do know, overall downtrend, hey, it's gonna hit our, like if we were to go into, it's gonna hit our TP. So when Dr. K's throwing as well, understand that when she's throwing, she knows it's gonna hit the TP. So the reason I take a long time to enter trade because I want to try to get a straight in the blue. Sometimes it's not the case, and we just can't make it. Yeah, CJ is moving down nicely. Yes, it is. Sometimes it's not the case. Okay, so you either perfect your entry point or you can just know that it's going to hit your TP. And so just looking at the overall day chart, 4 hour, sometimes you may get in and be like, well, I just know it's going to hit the TP, and just you leverage properly. Yes, they're the engulfing candle. So, yes, the engulfing candle, we call it a. So these are actually called. I'm gonna give you the proper term. So, because all these are patterns in the market as well too. You get a an engulfing candle. Yes. So if you get three consecutive candles like this, let's say you get, and this is all of them, you get three consecutive candles like this, and then you get one big. You get three like this, and then you get one big engulfing. That's a reversal. Okay. Or you get a double top. You see, this is a double top. Okay, price hit that point, close. Price closed exactly at the same point. It's a double top. Okay, price actually closed there. Look how critical this is. Price closed here, here, here. It's a psychological level. Okay, that's it. The only thing that changes these levels is the news. So news will hit, and then that's why you'll see the long wicks, and then it comes right back down to where it's supposed to be. All right, yeah, all these trades are moving down very nicely now. Y'all ain't tired of these JPY pairs. They ain't loyal at all. Y'all ain't tired yet. I ain't gonna lie to you. I don't like the way the JPY pairs move myself. Okay, so we're waiting. DD loves G, and once you learn how to do trade the pairs, you leverage properly. These pairs are gonna pay you every single time. So if you leverage properly, it doesn't matter. You're gonna get in, get out, and sometimes you'll get stuck in some trades. As long as you're leveraged properly, you can go into some other trades at that time. Just don't do the same currency pair. All right. So if you're already trading a JPY pair, you know, I learned that lesson. Don't trade another JPY pair. Go look at something else to trade if you're going to trade. Okay. So I think I've given you, hopefully you understand the breakdown of the cloud. I think that's pretty much it. Everything else, please go. If you go through the academy, you're going to become lethal weapons. I think the reason that I had to go through the process, I had to blow some accounts. I had to learn just like everybody else learned. The difference between the top 5% of traders, because 95% of traders fail. They don't fail because it doesn't work. They fail because they didn't stay the course. They got tired of losing money and really not learning. This is a learning process. You realize there are people making billions. There are institutions making billions of dollars daily. Do you really think they're going to turn over some money to little retailers like us? No, they're trained to move the market, and they know psychologically how to make this market what people are looking for. So that's why it's all mental. So the more that you get into these charts, the more that you can release to get your emotions out of the movement of the price. The more you get your emotions out of this and detach yourself from the money. I know it's hard to sit through. When I say detach, what do you mean detach myself from the market? I'm trying to get rich. I'm trying to make a gang of money, right? I don't want you to think of it in that. You are going to get rich the right way, being a boss in this market, being a wolf in this market. When I say that, I mean like you are a player in this market. You're not a gambler. There's a difference. 95% of traders who failed, they were gambling in the market. They was looking for something for nothing. They were trying to make a big hit on one push. They was trying to make $1,000 in one day with a $100 account. Okay, that's gambling. You have some people who understands like, hey, I'm gonna take this $100, and over the next 2 years, you know, they're long term. Over the next 2 years, hear me say it again. Over the next 2 years, I'm gonna take this $100 and turn it into 100,000. Okay. Now, giving you the mindset. Why do I say it that way? Well, because you don't have anything in your life right now giving you a vehicle that's going to allow you to grow as much growth as the Forex market, right? Your advisors can't give you any type of vehicle they're going to tell you, why you think they diversify, right? They say, hey, we're going to put some stock, we're going to put your money in this stock, put your money in this stock, put your money in this stock, put your money in this stock. They got 10 different stocks for you. Why? Because they want to level out, and they say, ultimately, you might get 4%. Okay. So what that means is, I always talk about this over a year term. They're talking about getting 4% a year. You know, in the economy that we're in now, folks, you're getting slayed right now. 4%, you're in a loss. Okay. 6%, you're in a loss. Inflation is worse than that. So 4% growth, that means let's take this little trading account that we got, whether you start with $100 or whether you start with $1,000 or whether you start with $10,000, right? You have $1,000 and they're promising you 4% a year. Okay, let's talk about this perspective, and I'm gonna tell you why I trade the way I trade now. That means in a year of $1,000, the person who says that they're a professional advisor and trader, they're only going to give me $40 back for my $100 of risk. For my $1,000 of risk. Because the market can take your $1,000. In 2008, guess what? Retirements were taken. People put everything they've ever worked for in this one account and let someone work it for them, and it was taken. I like the way. Let's see. One second, folks. I'm just looking as I'm watching these moves here. Okay, this is what we're waiting for. So we got 2 minutes on this candle here. So you get 4% per year. So that's $40 on your $1,000. And then some people lost all their stuff in 2008, risking everything for 4%. So now let's talk about what we do. So if I get 1% a day in 4 days on my $1,000 or whatever it was that I put in there, I would beat my financial advisor, right? Or my mutual fund. 4 days, I would beat it. So why do we get upset when we're talking about getting 4% growth? So good. And I'm going to read this out. She said, I took my money out of my 401k that was less than 5% per year. I trade on that and made 5% per day. Please, government is there. Man, please, government is there to keep people poor. So yeah, they're not going to give you, they don't want you to they're not here to make you rich. They want you to maybe survive, of course. Okay. So now we're here below our let's see what this 5 minutes saying here. So now we're getting it here. Don't have the fear of missing out. This is not a lot of pips. This is only 2 pips. Okay. It looks like a big move, but it's not. You want it to close below this point. And this is now I'll tell you, this would be I will get 5-10 pips here. I don't know if I really want to call this one because it's really not that much, or it's going to reverse back up here. The market is sideways. But so 401k, so 4%. So if you make basically 1% a day, you beat your 401k. So with the example Kay just gave, let's say she's making 5% a day, but let's just say she did 1% per day for 5 days. In 1 week, she beat her year of what her money was sitting in that 401k and didn't have to risk it all, right? So like now I'm looking at, so these trades, for those that are in CAD JPY and you leverage property, you see it's dropping now, right? Dropped all the way back down. Okay. So when we look at this in a 401k perspective, guess what? We leave that money in our account and we don't call up. Guess what we don't do, right? Because I see you guys in the group. Hey, is my money still in my 401k account? How is it performing today? You don't make the call on a daily basis. Say, hey, that retirement I put in my account, is it still growing? Is it on track to hit the 4% by the end of the year? Nope. They make you what? They make you wait to the end of the year before you get anything. Or maybe you get a monthly statement of where your account's at. And then most time when you see that statement, it grew by some cents. Okay. It didn't grow by anything, or it went negative. And then we get into trading. And for some reason, we have a different perspective of what we are doing. Do you realize that you are managing your portfolio? Okay. You're managing your portfolio in this trading space. So there you get the pullback, finna come back and test the area. So you're managing your portfolio. That's it. So if you can look at it from that perspective, don't try to get rich quick. If you do the right things, you will get rich over a period of time. In 1 year, over 2 years, even if it took you 3 years to master this. Folks, I've been doing this now 18 months. Okay. And I feel I finally have some mastery. Okay. I've mastered it. Okay. And now is where my real growth has been happening at, because I finally mastered it where I'm comfortable. So there'll be times that I take time to myself where I don't always trade with everybody, because this is what I want you guys to learn this, where I want you to be able to trade to yourself where you don't have anybody around. It's you and the charts. Okay. You and the charts, no one else. You're not calling trades for no one. You just have that personal time that you sit down, you get on this web analyzer, you say, today, I'm going to grow my account by 1%. On my own. Today, I'm going to grow my account by 5%. When you have that power. So that's why I teach on this so much, because I know the power it gave me when I learned it. And you guys got all the tools in your hand. I give you everything. There's nothing I'm holding back from you. I tell the truth. I'm transparent. I tell you what my accounts, I'm transparent. I want you to have it all, because I know what it feels like. You want to know, are people going through the same emotional roller coaster that I'm going through? Are people blowing accounts just like I am? Are people getting the bad trades like I am? Yes, they are, right? 95% of them. But there are 5% of people that figure it out. And I believe that IML is a part of that 5%, is a major shift of that 5%, okay? Because you're getting everything. There's no agenda. There's, we're not the broker. We're just an educational platform. That's it. I'm still learning from the platform. I love plugging into Christopher Terry now because I now understand him. There was a time when I first started, I did not understand Christopher Terry at all. At all. Now I get on, man, I love listening to Christopher Terry. And I see why he gets excited. When he gets excited, I'm excited. Like, because I know what he's seen. So put yourself in a position so you can start having those big conversations. So when those big conversations happen, you don't miss the wealth transfer. Because if you don't already know, the wealth transfer has already started. And I don't know about you, my family was not rich, okay? My family didn't grow up in big homes, right? Matter of fact, in my family, we didn't own a home, right? I am one of the first to own a home in my family. Listen to me, okay? So do you think there are some mindset shifts that I had to break? Absolutely. There is some poverty mindset that I had to shift and break. One of those is there's no such thing as something for nothing. No such thing at all. Everything in this world you got to pay a price for. Guess what? There are people who've been playing the lottery their entire life. I had a family member tell me, I've been playing for 20 years, the same number for 20 years loyally. And I think about the money they invested. They paid a price, right? People say, that's paying a price. Everything you do, there's no such thing as not paying a price. You're going to pay a price in sweat equity, right? The price we pay in this one, we got to give up sweat equity. What I mean by that, we got to give in, we got to learn the system. We ain't going to be able to skim through, learn this special strategy. Folks, do you realize if there was this special strategy out there that was just hitting every time that everyone would be rich? Of course not. There's nothing that's guaranteed. Everything requires sweat equity. Everything requires discipline. You want to have good health, eat good food. You want to have a good physique, you got to hit that gym, right? When I'm in the gym and I want my physique, I got to hit the gym. I don't care who you are, right? I get, and I'm talking about fitness too, because even on my fitness journey, we're looking at this. We got the retest here. Let's see. I would say you only can scout 5 pips on this one. I wouldn't take it too far. Me personally, I'm not gonna enter this trade because I want to get it's really not that big. This is only 10 pips. So I wouldn't enter this trade necessarily. We've been looking at. Let's go look at GCAT real quick. I know it called it. Okay, GCAT's not ready. NU was only 10 pips for that flag, so I wouldn't do that one. Let me take a look at EURUSD. I know I'm just talking here. Let me get back on track for you guys. So here, long story short, mindset wise, there's some work you have to do. If you didn't grow up around your family's not millionaires, guess what? There's some stuff you have to learn. There's some patience you have to learn. People are rich for a reason. People do make a lot of money for a reason. It's not that they were lucky. Okay, you got to get rid of the victim mentality, regardless if it's. So one thing I had to realize is that the world is not here to give me anything. The only thing I'm ever going to get is the things that I fight for and that I want, okay? And I do have to work on my mindset, period, okay? And that's all of us on this call, okay? So enough of that rant there. So let me go and answer some questions here. I'm enjoying spending some time with you guys. Hopefully I'm giving you some value. So I seen US 30, so let me go ahead and get US 30 knocked out. And let's go over some charts real quick. So we're still working on GCAT. We waiting on GCAT is going to pay us nicely. Okay, we gotta just be patient with it. And sometimes we just gotta wait for the market to give us. You might just be waiting for that one move, but one of my mentors, Stevenson Lindor. Sometimes you could be waiting for a move, and when that move happens, that's going to be the move that pays you for that month, pays you for that week. It may be that you only do one trade a week, but it pays you for that week. I listened to Crypto Picasso. And he says he does, one trade a week or 2 trades a week, and it pays him for that entire time. So it might be that one setup that you're looking for that pays you the entire time as well, too, meaning we can go in and scout like EURUSD last week. That was the only trade. We did that trade several times. And so we went to that trade several times last week, and that's what we ate off of, all the way down for 119 pips. So it may be that one trade this week, GCAD. If GCAD materializes, we might just eat off GCAD this week. That might be it. Okay. All right. So US 30, let's take a look real quick. Same thing, same analysis. Let's take a really quick look. So we look at the 15. Let's just go straight to the day. Okay, I'm gonna go straight to the day. Let's look at the highs and lows. So as soon as you look at a chart, here's what I'm gonna just have you see. Let's look at this. Immediately place your eyes here. See that? Price topped out there. Okay. Price bottomed up around this point here. Okay. So now we got something to work with off the day chart. Let's look at the weekly. Okay, above the cloud on the weekly. Like I said, I'm still learning. Like I said, definitely watch Dr. K. I'm still looking at the moves. I like the index. Index works, from what I'm understanding, index is very good with market structure, price action, of course. Right, there goes your high on the weekly. So your weekly high here. Or previous high, I'm sorry, not the weekly high, your previous high, okay? Your previous weekly high here, okay? And then your previous weekly low here. I think this is the highest. I'll tell you the best time I was trading this part. I love when you see price reach a high that has never been at. Look at this. A little bonus trading here. This is the highest that US 30 has ever been, folks. So look, I want you to understand. So if you leverage, like I was trading US 30 with 0.01 back. This is the only time I trade on my own US 30 when it reached a very high. So it was at the very top. I traded US 30 right here. I sold. And then I put a stop loss above because price had never been that high. So I was like, well, shoot. Worst case scenario, stomp me out. Best case scenario, I'm going to catch this drop down. So that's where I really love. I traded US 30 on my own with that part because I understood that. Now just doing our analysis. So month is above the cloud. So it's been, US 30 has been bullish. Okay. Above the cloud on the weekly. Day chart, below the cloud. Okay. And now it's consolidating. So price needs to make a decision. Okay. Right. Sideways market. But we see it's corrective. This is corrective. Price is hitting this area or this area. So you see price currently hitting here right now. So what we're looking for, possibly, right? You might get a break. You might get a break to the down. Let's see, let me move all this stuff out of the way. Now we got a lot of stuff here. So we can get a move down to 25,420. This is why US 30, because US 30 just moves like this. So let's just, even if I remove the cloud out the way, okay. So down to this point here, or if price breaks this point, then up to this point here. You see what we're looking at here? Once again, break, retest. So price breaks past this point, we're going to go here. Okay. Price goes above this point, break, retest, price going to go here. All right, that's US 30. Yeah, I would say 500. 500 is not even enough. I would say it definitely. I would call 1,000 is the minimum. 1,000 is the minimum. I would say to use US 30. 500. I mean, you're testing the waters. You're just trying to build that account up real quick. If you're like, I can blow 500 real quick. You can do 500, but yeah, for sure. I would say 1,000 really would be a safer bet. And really, and then obviously, I learned the US 30 moves fast, folks. I'm demoing US 30, and I put 25 grand in a demo account, and I watched the way that thing beast. Nah, okay, nah. You know what? I over leveraged. Actually, I over leveraged my demo account. I did a 0.50 lot size, and thank goodness I was in demo. That was too big of a lot size for that account. So yeah, 0.01 for every 1,000 is what I'll tell you, for sure. Because actually, I did. Let me see, 25 grand. I'm going to tell you right now because I know exactly how that move, what happened with that move. Yeah, I would say that. Yeah, definitely 0.01. So for sure, 0.01 for every 1,000. And then you want to probably even go lower than that at some point because of the way that it moves. All right, hopefully I answer your question for US 30. So that's US 30. Just know that in seconds it can move here or it can move there, for real. Okay. But I'll tell you, for US 30, just pay attention when Dr. K is talking. Really listen to her. Don't just think about taking the trade, right? When she's talking and if she's training, listen to her. When you start hearing things like, okay, the high is here, you start seeing her place, take her cursor, and she goes like this. Watch where that cursor goes, right? She's looking at the high, and then she's probably gonna take that cursor down. She's gonna look at the low, okay? And I want you to pay attention. Those are the keys because you should be learning this, okay? Because that's what you're looking at. All right, let's put that cloud back. All right, what's the next one to look at? I want to get through, since we didn't do any trading today, I want to give you guys, look at the trades that you guys are in. And hopefully you're really understanding so that you have this on your own so that you can use you can use the web analyzer on your own. Guess what? It's calling a bot. So just make sure, demo this first. Before you do any trade, what I suggest, if you want to start trading indexes on your own, demo it. Demo the indexes. I'm demoing indexes right now. You know, I'm using account $25,000 account, dollar accounts, because that's what I want to do. And make sure you understand how they move in it. When you start winning consecutively on your own, maybe you do 10 trades, you win 9 out of 10, do it again. And if you are winning those trades, then that's when you go put your real money in, and then you make it happen. It's game time, okay? GUR30, I'll take a look at that real quick. GUR30 kind of moves like, that's when I had in my demo. GUR30 did not like me. No, I didn't. I was trying it out. So I was seeing it just moved so fast in my demo account. All right, you know what? There. I was wondering why it wasn't coming up. There we go. Nope, that's not what we want. Is that right? Yeah, Germany 30. Okay, yes. So here's what you're seeing here. So so boom, price respecting. Okay, so I want you to see what's going to possibly happen. Okay, you see this right here? Price came here. This is the shoulder. This is a head and shoulders pattern forming possibly. So we might get another push down to here. Okay, it could wick all the way down, and then it's going to finally reverse back up. So this so several things are going to happen here. First, what you're looking for, if price didn't break, but if price broke this point, then what are we looking for? Then the next point is here. This is off the daily. So there, right? See that? So what I'm seeing here, possibly price may come back down to this point here, or at least close at that point here. and then it'll create it. And this is market geometry and all that. So go learn the patterns, not harmonic patterns. So right, so you can get a point here, then obviously your neckline, and then we get that shift all the way up, possibly. So that's what I see there so far. But once again, we don't know. We gotta let the market do what it's gonna do, because right now it's in a zone. So you see it's respecting this area here. So it may actually drop back down. Then once it gets that final push down, it'll definitely be, if you, whatever trade you're in, be out of the trade, close it out, and then see what the market, if the market's gonna bust below here or if it's gonna go above. Let it do its thing. Now looking at the cloud, okay. Let's see what we got here. Once again, I go, no, is it a flag correcting, or is the trend changing? Right? Trend may be changing. We do have an inverted head and shoulders. Okay. So the trend may be changing. So on the 4 hour, it's coming down, we might get our shift up. So the trend is changing. So this is going to be our next target for GU. If it boom bounces off of this point, I would be in this trade. I would look to get into this trade, of course, till after this point, 11.8. So 11.850, I would want it to bounce off this. So it has to break this previous high here, breaks that point, boom, retest this area, then we can take it up to this point here. If it doesn't break and retest here, no entry there. And then for it on the downside, obviously we got to come down here. Okay. So that's GUR30. So hopefully, if that's what those are just your points that you're looking for. Okay, what else we got? Look and see other questions real quick. I'm gonna speed through these questions. So I got 18 questions. Let me see if I answer them all, and then our session will be done. I promise you today, as soon as we get off here, I'm gonna put these recordings on. So here's what I'll say. I don't know. So here's a question, folks, that she asked. She goes, they say market movers study prominent traders and may choose to move things against them. Could they be studying us? I don't know. I mean, I don't think that we are big. First of all, I don't know that. I don't know. And I know there's market movers. There's all type of stuff that's out there. Could we put a big volume? Yes, we have 400, 500 people on a call, and could they realize that at 8 a.m. there's 500 orders that are put in every time? Of course, and especially if we're all using the same broker, there's so many things could move in against your favor, right? There's 500 of us. We got the same brokers, maybe Hugo's Way, Trader's Way. Who knows? Like I said, the only thing that I do know is the only defense that I have in the market. The market's got to still do what it's got to do. They can't move the entire market. Okay, because it's 5.3 trillion a day. So they can move it temporarily, maybe, I don't know. That's some studying I have to do. I have a lot of learning to do still. All I know is for myself what I can do. And what I can do is just make sure that I'm leveraged properly. Okay. But is it possible? Yeah, of course. Yes. Your broker there can be contracts. We know there's stop hunts. Of course, you put a stop loss in, they're going to search out your stop hunt, hit it, stop loss, hit it, and then the trader's going to go where it's supposed to go. Okay, so that's a scenario. Yeah, that's possible. So hopefully that answered your question. I don't think that we are significant. 500 customers in a market. I do like to limit my exposure in the market. The more exposure to the market, the more you see CADJPY, right? We've been exposed to the market way too long. For example, with CADJPY, so now we're kind of at the mercy of the market right now. But we gotta wait for this thing to swing. So we're off this daily, and as long as it stay below the trend, then we can take it down. But if news or someone keeps on saying stuff, right, is gonna delay, where we want that trade to go. All right. Okay, Alex asks, he goes, if you look at different time frames, should you trade for that amount of time? No, that's not what the time frames mean. Okay. The time frames just mean how long it took for the candle to close. Okay, open and close. So 15 minutes per candle. So open here, close out here in 15 minutes. Okay, that's what that means. All right. Doesn't have anything to do with how long you're going to be in a trade. We don't know how long a trade is going to consolidate. We don't know how long, you don't know. You don't know anything. You can't predict this market. We can look at past history. And so we look at past history. We look at past history and we say, okay, what I do know is price hasn't been here since 2015 or 14. And we make a suggestion, right? We make an analysis. We make an assumption of where we think the market moves. And then we use indicators, right? We may use an indicator like the cloud. You may use moving averages. You may use the EMA 200. We all use different things that ultimately it's kind of the same. Biggest thing, we want to know how high has the price been? How low has the price been? And based off that, we're going to make a determination of whether we're going to enter that trade and then what our risk factors are. Okay. That's all that we got when it comes to this market. So now when you're hearing people talk about the Dow and it's down this percent, all they're telling you is, and you hear the lows and the highs of the market and the Dow, listen to those things. So they're telling you they're giving you a technical analysis. Now, of course, we can't control when, the United States president speaks or when the prime minister resigns, or those are the things we can't control. So I got a question here. I'm rebuilding my account. So what kind of stop loss would you recommend for a person with a $50 account? So we know the rules. So obviously going through the academy, right? In the academy, proper risk management says do not risk no more than 3% of your account. So I'm gonna go on my calculator here, right? Let's talk about what risk management is based off how much you're willing to lose, okay, to go get one trade. So if you had a $50 account, you would times that times 3%, okay, so 0.03. So that means I can risk for my $50 account. For proper risk management, I can risk $1.50, okay? So let's say that someone throws a long-term trade. Let's say they throw a 50 pip trade and they say this 50 pip trade is 50 pips. And they suggest a stop loss. And they say the suggested stop loss is 30 pips. Okay? So 3 to 5. So 30 pip stop loss. So now the question is, can I do that trade based off what they told me it is? Okay, so most people you can use a blanket stop loss of 30 pips if you want as well too. So now we have to determine, can I do the trade? So with $50 in your account, suggesting, let's say, a 30 pip stop loss, right, to get 50 pips. You can only risk $1.50 with proper risk management, 3%. Now you can do more, just know we're talking about this leverage. So that means $1.50. So what is my pip count? So that means for every 0.01 lot size is 10 cents. Okay, so 10 cents divided into $1.50 is how many pips? 15 pips. Okay, so I went to the very lowest I can go, 0.01. 15 pips at 0.01 is 3% of $50. So, right, to get 30 pip, to have a 30 pip stop loss, you're over leveraging, right? Right? You're going to be risking what? 6% of your account to get a 30 pip stop loss. Okay, so could you do that trade without over leveraging? No. So automatically off cuff, you're over leveraged with 0.01. So that's just the truth of the matter, but it's $50. So what do we do with $50? We just use 0.01 until we get our account high enough, or you just know that you're over leveraging your account. Did everybody kind of understand that risk management is very hard to teach and understand, right? It took me some time to really learn when we talk about risk management is really, what are you willing to give up? Okay. What are you willing to risk to get the reward? Or maybe you might say, you look at it that you're not risking it. If you're swinging it, you're like, I'm going to be in this trade. I have enough leverage where this trade is going to swing back and hit my TP. Then there may not really be you are risking, because there's going to be a point where sometimes the trade just is not going to return. And you have to know that out. Or most times trades do swing back. So you went so low on the leverage, if you use 1% for the most part. So you can't use, so 1%, let's look at, there is not a 1% of 50. So if we say 1% of $50 times 0.01, that's 50 cents. We can't go that low in lot size, right? So you would have to do a nano lot size, and you can't, some brokers maybe allow you to do a nano lot size, okay? So 50 cents per pip would be a 0.005, I think, or something like that. No, I'm sorry. Did I do that right? Yeah, 50 cents, because 0.10, 0.01 is 10 cents per pip. So you're trying to get 5 cents per pip, and that'll be 0.005, I believe it is. So you can't go that low. Yeah, numbers don't lie at all. That's right. That's right. All right, so that's risk management, folks. So now that you know the numbers, so the truth be told, right? If you're $50 account, you have to over leverage. $100 account, you're at 0.01. $50 account, you're over leveraged. So that's just a hard fact. That's what it is. But you're risking. So what are you risking? Hey, I'm willing to go in for $50 and try to grow that account. That's why people. But think about this. People, you know, you hear Dr. K's story, and this takes a lot of concentration. She grew a $40 account. Okay, but you have to be on these charts and know what you're doing. And that's it. And it's only you and the chart. It's no one else controls your account. Just you and the chart. Dr. K can't, like, at some point you have to realize I can't get you rich. Dr. K can't get you rich. We can give you the tools to get rich, right? The knowledge. We can give you a couple trade ideas. At some point you still have to become a good trader and know your limits in your account. Okay. So no trades for this session, obviously you guys see. Hughes Wave 500 to 1 leverage size. Can you speak to that as well? Okay, when a broker is giving you leverage, it just means the amount of swing. I'll say swing or percentage levels that you can have before you could get stomped out by that broker. Okay, so what it means for every dollar, let's say you put $100 and keep it simple, $100 into an account. Okay, put $100 in an account. And they give you a leverage of, say, 200 first, a leverage of 1 to 200. That means for every $1 in that account, they are giving you 200 as if you were trading with 200. So you can have a larger margin level percentage, meaning you can stay in the trade much longer before the broker will actually stomp you out itself. Okay. If you do a 1 to 200, you're going to get stomped out a little bit earlier, depending on where if you're not setting stop losses. If you don't set stop losses, it determines when you're going to be stomped out by the broker. If you're setting stop losses, it really is not going to matter because you're going to get stomped out first with your stop loss versus before the broker will stop you out. Okay. So basically, it's how much leverage or room the broker is giving you. So when you look at your percentage level, when I say I see some of you when you screenshot and I see you're in profit, you'll have like a 200% leverage margin percent level, or 100% margin percent level. You're over leveraged based off that, first of all, right? But it may be if you had 1 to 200, that leverage is going to be right there. But no, if you had it at 1 to 500, your margin percentage level would actually be higher up. Now you can blow your account. Give me 1 second, folks. And let me get ready to finish this off, folks. So we are a little bit past our time here. Let me answer these questions. So that answered the leverage question right there. USD CHF. Let me look at that real quick. So we're gonna go through this real fast. Don't ask any more questions here. Let me just go through everybody's questions. All right. Let's just look at the day chart. Automatically go to the day chart. So you see the day here, overall downtrend, right? Price did change up here and then decided to go back down. Okay. I don't like this. I'm on like, so I don't trade the Swiss franc at all. I don't like the way that it moves. Boom, downtrend, double top here, came back down below the cloud, kind of still leveling off. So overall, it's in a downtrend, right? Shifting back up. Once again, previous high. We can go a low here or here or here, right? And really what happened, you got your engulfing candle. See this engulfing candle here? That's an engulfing reversal, right? Flag. So this may push up. So 6 pips at this point. So if it either is going to reverse here, see this point here on the 15? So look to the green line. You see where price reversed back here? So we're looking in this area. So price will you push up, but you see price respecting this area heavily right here, so it could drop as well. Okay, once again, same thing applies as we look at this green line, this money line. Okay, high, it needs to break, retest, and then we'll get our shift up, or you might get your shift back down. Okay. And this is a 100 pip move. We get a break of this line here. If it breaks, then boom, we get this. If not, price breaks, retest off this, and then we get our big shift up that we're looking for up to this point here. Okay. So break, retest, shift up, or it breaks this line here. If this could be corrective, breaks here, it comes down to this point there. So that's USD CHF. So Marcia, she says, with proper leverage, the compound growth chart doesn't work. Do you have any suggestions on how to use the growth chart? Yes, you're gonna put 1% in there. So on my growth chart, I have 1%. So I'll tell you, so for example, 1% growth chart with a $5,000 account, in 90 trades, you're gonna grow your money to about 12,000. Okay, so I think 12,000 is still pretty nice, right? And I've thrown 90 trades over I've definitely thrown 90 trades over because I throw in my group as well too. Probably over a month and a half period, will take about to throw 90 pips, or 90 trades, or you can go in yourself. Depends on what type of trades you're going into. You might be going into longer trades other than 10 pips as well too. Okay, that's it there. So you can change your percentage level, change the daily growth. So because you can use your daily growth. If your goal is to get 10%, just because your goal is to get 10% a day doesn't mean that has to be for one trade. It may be that you're looking to get 5 trades in a day, 2% for each trade, or 1% each trade will be 10 trades. So just but for simplicity, just put 1% there. 1% growth per trade. So you can use that chart per trade and put 1% there. And that will give you the real number. All right, let me go through this. Okay, that is my time, folks. I think I've answered just enough of all the questions there. And then I see someone's honest. Trust me, I always give you my honest opinion for sure. Okay, so before we get off here, let's look at CADJPY. So overall, I mean, you guys see it. Price is fluctuated between here. So once again, same thing applies, right? Price breaks above the point and starts shifting up. This is obviously the high. I'm not staying for that point. That's going to be too high. But news hit, it just wicked. So right now, the market is steadying out. So on the day chart, so it can do same thing applies. Breaks above this point, it can shift all the way up. We have to be out. Okay. But right now, price is consolidating. Right. This is a flag. This is corrective. And that's your 4 hour. Just let price do its thing. Price is going to make a decision at some point. So same thing applies. Price is going to break up. That's going to be the next point here. Or price is going to shift down. Obviously, that's the first point there. What was our entry? And let me see what our entry was. All right, and price. And so our entry was, my entry was 796. Oh yeah, so this is what we're looking at right now. So either we're gonna get, it's gonna break up, or we're gonna get our shift down to this point. We go to 79,200 possibly. Okay, and that's past our entry, of course. All right, so that's it, folks. That's my time. I will see you guys on tomorrow. Look for, hopefully I'm looking for, I'm in CADJPY still. Now you guys, I think I taught you pretty well about proper risk management. Just know if worst case scenario, just remember 0.01 for every $100 in your account and you'll be safe. Okay. So hopefully that gave you some value today, folks. I know we didn't trade anything. Obviously, we're in a trade right now, CADJPY. So some of you have taken some losses, so that's gonna give you an emotional detox. If you are emotional today, do not trade in the market. Let yourself cool down, get in the right space, go into the academy, learn some things, take some notes, get your emotions right, and then we're gonna reattack this again tomorrow, and then hopefully, CADJPY, we've made a decision. All right, later.